In a bold statement, President Donald Trump has claimed that former President Joe Biden is to blame if the U.S. economy shrinks again in the second quarter of 2025. This follows a reported 0.3% contraction in the economy during the first quarter of 2025, the first decline since 2022. Today, we'll explore Trump's claims, the economic context, expert reactions, and what might lie ahead for the U.S. economy. Let's start with the first quarter of 2025. According to the Bureau of Economic Analysis, the U.S. economy contracted at an annual rate of 0.3% from January to March 2025, a stark contrast to the 2.4% growth in the final quarter of 2024. This downturn was driven by two key factors: a massive surge in imports and a reduction in government spending. Imports, particularly consumer goods like pharmaceuticals and capital goods like computers, skyrocketed as businesses stockpiled goods to avoid anticipated tariffs. This led to a record-high trade deficit, significantly dragging down GDP. Federal government spending also fell, especially in defense, though state and local spending partially offset this decline. Despite the contraction, there were bright spots: private inventory investment, consumer spending on services, and exports all increased, showing underlying economic resilience. President Trump has pointed the finger at Joe Biden for these economic challenges. In a post on Truth Social, Trump wrote, "This is Biden's stock market, not Trump's. I didn't take over until January 20th. Tariffs will soon start kicking in, and companies are starting to move into the USA in record numbers. Our country will boom, but we have to get rid of the Biden overhang. Be patient." During a cabinet meeting on April 30, 2025, he added, "We came in on Jan. 20, and I think you have to get us a little bit of time to get moving, but this is the Biden economy." Trump further claimed that even if the economy struggles in Q2 2025, it would still be Biden's fault, despite Biden being out of office for 6 months by then, CNBC. Trump argues that his tariff policies, including a 10% universal tariff and a 145% tariff on Chinese imports, will ultimately strengthen the economy by encouraging domestic production. He dismisses the current downturn as a temporary Biden overhang and urges patience. However, many economists and analysts challenge Trump's narrative. They argue that Biden left office with a strong economy, characterized by stabilized inflation and robust employment. According to a CNN business report, by most gold standard measures, President Joe Biden handed Trump a booming economy. The Q1 2025 contraction, they say, is more directly tied to Trump's tariff policies, which created uncertainty and prompted businesses to front-load imports, artificially inflating the trade deficit. Economist Ian Shepherdson from Pantheon Macroeconomics warned that maintaining these tariffs could lead to economic stagnation, and imposing reciprocal tariffs in July 2025 could trigger a recession, NBC News. The New York Times noted that Trump's trade policies are expected to cause higher inflation and slower economic growth, as tariffs increase costs for businesses and consumers. That said, some economists acknowledge that Biden's policies weren't without flaws. Jai Kadia, an economist at the Cato Institute, told CNN Business, "The economy was bad under Biden and that was reflected in the polls last year, but inflation and every other economic indicator had more or less stabilized when President Trump took office." Kadia criticizes both administrations, Biden for massive spending bills that fueled inflation and Trump for tariffs that disrupt trade. This suggests a complex picture where both leaders' policies have shaped the current economic landscape. The economic uncertainty has also hit financial markets and consumer confidence. During Trump's first 100 days, the S&P 500 dropped by 7.9%, the second worst performance for a president's initial 100 days since Nixon's second term, CNBC. Significant declines followed tariff announcements, reflecting investor fears about inflation and reduced corporate profits. Consumer sentiment has plummeted as well. In April 2025, confidence dropped 32%, hitting its lowest level since the 1990 recession, largely due to concerns over tariff-driven price increases, The Guardian. This erosion of confidence could further dampen consumer spending, a critical driver of economic growth. What does this mean for the second quarter of 2025? Economic forecasts are mixed. The Federal Reserve Bank of Atlanta's GDP Now model, which provides real-time GDP estimates, projected a 2.4% growth rate for Q2 2025 as of April 30, 2025. This early estimate suggests the economy may avoid another contraction. However, it's preliminary and could change as more data emerges. Other forecasts are less optimistic. EY revised its 2025 GDP growth forecast to 1.1%, down from 1.7%, citing tariff-related disruptions. S&P Global Ratings predicts 2% growth for 2025, indicating a slowdown. Some economists, like those at Morningstar, warn that continued tariffs could tip the economy into a mild recession by 2026. In summary, President Trump's claim that Joe Biden is responsible for any potential economic shrinkage in Q2 2025 oversimplifies a complex situation. While Biden's spending policies may have contributed to earlier inflation, most economists argue that the Q1 2025 contraction and current challenges are largely driven by Trump's tariffs, which have disrupted trade and eroded confidence. Looking ahead, early indicators like the Atlanta Fed's estimate suggest growth in Q2, but the trajectory depends on how tariff policies and global trade tensions evolve. The U.S. economy is at a crossroads, and the coming months will reveal whether Trump's policies lead to the promised boom or further challenges. Stay informed by subscribing to our channel for the latest economic updates. Thank you for watching.